Hi everyone, and welcome to Investing Strategies. It's Alissa Coram with Investors Business Daily from the NASDAQ market site in Times Square. Today we're breaking down the stock market's whipsaw action as of late. How will investors know when the coast is clear? The founder and managing partner of Fairlead Strategies is here to share what she's seeing in the market right now. And we'll also analyze a few software stocks worth watching. Now, the software sector has no doubt produced some of the biggest gainers this year. So I'll be walking you through IBD's key tactics for identifying sector leadership. Plus, we're sitting down with the head of research and strategy at Global X to learn about an ETF that's offering investors a way to play the hot cloud computing trend. Investing Strategies starts now. All right, let's get started with this week's Market Insights. With me for today's discussion is Katie Stockton, founder and managing partner at Fairlead Strategies. Thanks so much for being here today,
Of course.
Katie.
Glad I could join.
All right, so we have seen quite a volatile market as of late. I think some whipsaw type action, maybe a little bit of a head fake with S&P and NASDAQ getting back above the 50-day line last week, but that's now looking to be short-lived. What indicators are you looking at right now?
It's funny, it always seems to happen in August, doesn't it? When it should be quiet, but of course the market never really cooperates in that way. So what we did see, of course, was a very sharp pullback for the S&P 500. I believe it was about 7% from the high point to the low point of the pullback. It's not to say it's definitely over yet, but there are some indications of that. Usually pullbacks in uptrends are very sort of fast and furious. And the indicators that I watch to really signal the end of it are primarily the market internal measures, and those are things like sentiment and breadth or market participation. And when those reach oversold extremes, we tend to have some kind of entry underway for the market. So the S&P 500 down sharply last Monday, as we all know, we felt it very well. That was our extreme day. So that's a day that we got that extremely bearish reading in market sentiment data, and yet that's a contrarian positive. And we also got extremes in the market breadth readings, things like the percentage of stocks above their 50-day moving averages that reached an oversold level too.
Okay, so how will investors know when the coast is clear then? I mean, we're keeping a very close eye on that 50-day line, maybe some resistance there, but what support levels are you looking at for investors to know when they might feel like they could get a little bit more aggressive with their exposure?
Support is really important. So for the S&P 500, I'm watching roughly 2850. The 200-day moving average is rising just below 2,800, so maybe that becomes a level of importance as well. But I'd say even more importantly, we're watching momentum gauges. So we want to see momentum turn for that all-clear signal, for that confidence that indeed a tradable low is in place. Unfortunately, the momentum gauges turn positive after we already have the low in place. So we have the oversold readings. They tend to be a bit more sensitive, but we're more convinced once we get these momentum buy signals, these moving average indicators, things like that, they tend to flash decisive buy signals once the market's ready to get going again.
Okay, and you mentioned breadth and the importance of having that. Can you talk a little bit more about that and what exactly you're looking for as far as participation of the different groups and what we're seeing right now?
Right, so when you look at breadth, you can look at it two ways, as an oscillating gauge, like the percentage of stocks above their 50-day moving averages, or as a cumulative gauge, so looking at things like the cumulative reading of advancers and decliners on the NYSE. So both are very important. What we want to see are no negative divergences in the cumulative readings, and indeed we do not have those, at least the ones that I track. And then in the oscillating measures, you want to see that oversold reading. So we do want to see participation, of course, come back into the market as we rally. It really is always the case for the most part. And we do want to see it spread out to sort of the small and mid-cap arena, which of course has been underperforming relative to large caps. That would be a really nice complement to a momentum buy signal.
All right, and with the headwinds that we're seeing right now with trade war tensions, what we're seeing in Hong Kong right now, what do you think investors should be doing with their portfolios right now, given some of these headline risks that we're still seeing?
Well, some hedging is probably appropriate. Those hedges obviously would have been better put on a couple of weeks ago. We are starting to see signs of short-term downside exhaustion in those regions that are under pressure. China for one, Hong Kong. Those markets do have counter-trend signals that are somewhat promising, but again, we need to manage risk by waiting for those momentum indicators to turn positive to really convince us that indeed this oversold condition matters and will then preserve support levels.
Okay, well, with that in mind, let's pivot to this week's stocks to watch, starting with Akamai Technologies. So, Katie, what are you seeing here? Akamai looking pretty resistant to some of the broader weakness that we're seeing, holding up near highs.
That's why it's an important one to bring up. We've seen very good outperformance from Akamai this year to date. And it's really seemingly, I'd say, immune to the pullback that we have seen in the broader software sector. So that momentum is positive across time frames for Akamai. It's not without an overbought condition, but that's sort of natural when you do see the breakouts that have occurred. So we have a relatively fresh breakout in Akamai, and I think that's helped preserve its uptrend. And until we see any kind of loss of momentum, I think we stay with that kind of setup.
Yeah, at IBD, we are seeing a recent breakout over a cup with handle pattern. What level would you be considering a buy for Akamai?
A little consolidation would be welcome at this stage because that would help it sort of, digest those gains, if you will. So in the mid 80s, I'd be very interested in adding exposure.
All right, and then how do you factor in the fundamental picture with your buying? Clearly, technicals are a big focus, but we are also seeing somewhat decent bottom line growth here for Akamai.
Well, I trust the fundamentals to be really the driver of those long-term trends, and because Akamai, for one, is in a long-term uptrend, I trust that that's a reflection of the company. What we try to do as technicians is some sort of add value in the time frames that it's really market-driven, the moves, and that's where we can, manage our risk.
Okay, great. And then let's also take a look at Salesforce CRM. A little bit of a different looking chart here, one of the big names in the software space. Below its 50-day and 200-day moving averages. What is your take on the chart?
Well, another one that's important to highlight because it has underperformed so dramatically year to date. So that makes it a standout in a negative way. And yet if you look over the very long term at CRM, it's a very well established uptrend. The loss of momentum is distinct, and yet it's still an uptrend technically, and you do have an oversold reading that is somewhat promising. So if we see some stabilization here, I would say roughly sort of in the high 130s, that would be promising for CRM, but not until you get that momentum shift would I say that the long-term uptrend is ready to resume.
All right, so around 130, is that where you would be looking to get in here?
It'd be more the high 130s, and that's where there's some support on the chart.
All right, yeah, and speaking of fundamentals, double-digit growth on the top and bottom lines, that is always good to see. And like you said, that long-term uptrend is intact, so we'll have to see where it goes from here.
Agreed.
All right, Katie, thank you so much for sharing your insights today. Really appreciate it. And coming up next, I'm going to walk you through IBD strategies for identifying leading sectors and the leading stocks in those sectors. So back in a minute.
This season on Cultural Capital, we are in New York City and San Francisco. Come with me as I tour some of the world's most innovative companies, from Squarespace to C3 AI, Giphy, and Figma. Learn how CEOs built growing companies while maintaining the ultimate office culture on Season 3 of Cultural Capital on the brand new NASDAQ.com.
Okay, now the best performing stocks almost always come from leading sectors and industry groups, and that's no coincidence. So when you're looking for stock ideas, it's good to start with figuring out what those leading sectors are. And why does this matter so much? Well, we're trying to find the cream of the crop. Why buy the best stocks in a poorly performing sector when you could buy the best stock in a top performing sector? The bottom line here, focusing on those leading sectors and industry groups will boost your success rate. Okay, so there are a few ways to figure out what the leading groups are. One is by looking at IBD's sector and industry group rankings, and the other is by screening and analyzing charts directly. So let's start with sector and industry group rankings. Now, IBD tracks and ranks the performance of 33 market sectors, and we further break those sectors down into industry groups. IBD tracks 197 of those. Our research shows that investors should focus on stocks that come from the top quartile of IBD's industry groups. Now, savvy investors know that tracking industry group rankings can also be helpful in determining sector rotation. Now, just because a particular industry group or sector is a laggard, that doesn't mean it can't eventually become a leader if the group turns around. So when you see a group quickly move up in the rankings, that's something you want to keep your eye on. And the same thing goes when you're seeing a leading group that's falling out of favor. Okay, so IBD's sector and industry group rankings is one easy way to find out where leading stocks are coming from. But you can also reach the same conclusion by analyzing stock charts directly. Now remember, last week we went over IBD's investing trifecta: top-notch fundamentals, the strong chart action, and favorable market conditions. In your investing routine, it's good to get in the habit of scanning stock charts with those factors in mind. And if you're starting to see a lot of chart pattern setups for high-quality stocks in a particular sector, that's your first clue that there's something you should be paying attention to here. And if you start to see breakouts to new highs from these setups that are working and leading to strong gains, well, that's further evidence of the type of action seen among the strongest industry groups. Okay, so to explain all of this, today let's focus on the software sector. That's one of the standout groups this year. It's collectively gained about 38% so far in 2019 and has only recently been outpaced by the aerospace sector, and only slightly. All right, now last week we looked at software sector leader CyberArk, and this week we're going to take a quick look at several other top software stocks that were setting up and breaking out around the same time as CyberArk towards the beginning of the year. Okay, so let's rewind the clock a few months when stocks were just starting to recover from the sell-off of 2018. That's when many top software stocks were setting up. For example, first, let's take a look at Coupa Software, which broke out of a cut base in heavy volume in late January and extended its gains in the following two sessions with strong volume as well. Now, shares of the enterprise software stock eventually pulled back a little bit here, but it formed a new base. And Coupa broke out of that base in late April and is up almost 40% from that buy point. And the stock is now working on a rare ascending base, which is marked by 3 pullbacks with higher highs and higher lows. And the buy point here is at 148.10. Now, earnings growth for Coupa has been strong, and while analysts do expect a slowdown in earnings from an annual perspective, bottom line growth is expected to hit 273% in 2020. All right, and now let's take a look at Zscaler from the Security Software Group. Zscaler cleared a consolidation in early February and extended its gains after posting a strong earnings report several weeks later. Now, the security software stock turned profitable just 3 quarters ago and has posted sales growth between 59 and 65% over that same time period. Now, Zscaler has climbed nearly 80% since that breakout. And last but not least, let's take a look at Shopify. And Shopify cleared a consolidation shortly after posting quarterly earnings growth of 73% in mid-February, and the enterprise software stock has now more than doubled since clearing that buy point. And the strong move has been accompanied by 2 quarters of accelerating sales growth. And the stock has also provided investors with multiple buying opportunities along its run to add shares to their positions. Now, these are just a few examples of the many software stocks that have made big moves this year. Many of those runs were sparked by breakouts happening around the same time. So if you're continually paying attention to what the leading sectors are and the action within those sectors, you'll be in great shape for finding leading stocks that are primed to make big moves. And when we come back, Global X is going to help us drill down into the growth drivers we're seeing in the software sector and what that could mean for your portfolio. You don't want to miss it.
Pick winning stocks with MarketSmith. Growth 250 shows you ideas with big potential. View charts packed with key data. Use pattern recognition to see action zones. MarketSmith by Investors Business Daily. Try 3 weeks for $19.95.
Now, another way you can play the software sector is by investing in a software-focused ETF. The Global X Cloud Computing ETF, CLOU, isn't sector-specific, but it does have a strong weighting of top software stocks. Here now to take a deeper look at the ETF as well as trends in cloud computing is Jay Jacobs. He's the Senior Vice President and Head of Research and Strategy at Global X. Thanks so much for joining me today, Jay.
Thanks for having me.
All right, so the software sector, it has been such a standout group this year. What do you attribute to the strong performance that we've seen broadly across this sector?
Well, we've seen this big bifurcation within technology where tech hardware has been very affected by the trade wars because they have to source a lot of their production through Asia, they're selling into Asia. But if you look at the software space, it's actually very much the opposite. It's being developed in the United States. Most of the sales growth is coming from domestic sources. So it's become kind of a tale of two different types of technology, with software much more insulated from geopolitical risk right now.
Interesting. And then I feel like the strength is pretty broad too, whether it's enterprise software, cybersecurity. So as a whole, in the different pockets, it's looking pretty good so far this year.
Yeah, I mean, we've seen a lot of strength out of the software as a service space, the SaaS space. It's a great business model. These are, companies are taking their in-house IT and offloading it onto another company and getting, kind of constant updates of that software. They're getting cloud storage of their data so that it can be accessed anywhere. And it's a recurring revenue model. So they're paying, every quarter or every month, which again, when you start to see a little bit of shakiness in the global economy, knowing that check is going to come in every quarter gives a lot more stability to that business.
And since we've seen such strong performances broadly this year, I think the question now is, what's going to keep that going? What sort of growth drivers are here that's going to sustain the growth in this group?
Yeah, I mean, so what's interesting about, kind of cloud computing more generally and software as a service more specifically is, although these technologies have been around for a long time, in some cases more than 20 years, it's still early in the adoption curve. So some estimates show that, only 50% of IT has really moved into the cloud or moved into software as a service. So there's still a huge addressable market that hasn't even been penetrated yet. So, companies that are very involved in the SaaS space don't see, our work here is done. They still have a lot more work to do in terms of selling into these new businesses. And that's happening at the very large enterprise space, as well as in the small businesses around the United States that want to offload a lot more of those services to cutting edge software companies.
So it seems like there's still a pretty long runway for growth here. And let's dive into this ETF here. So this isn't a sector specific ETF, it's rather tracking this cloud computing trend. But a lot of the names in the top 10 holdings are closely tracked by IBD. We have Anaplan, Shopify, Coupa, Zscaler, to name a few. So this is weighted towards a lot of these software stocks, but tell me a little bit about why this in particular is a great way to play the cloud computing trend and take advantage of a lot of these leading software names.
Right, so when we're looking at thematic investing, we are intentionally throwing out sector classifications, we're throwing out geography, because we don't care. We want to get the companies that are best exposed to these themes. So we've identified cloud computing as one of these disruptive themes that's going to change the global economy over the next few decades. And when you look into that theme, you see that there's a few different segments that really are well positioned. So the first is software as a service. We've talked about that a lot. That's a huge part of the theme because this is just a very well developed industry. There's a lot of public companies. There's a lot of pure play exposure there. So it naturally just kind of gets more of the exposure of the fund. But we're also looking at platform as a service companies that allow for an environment for people to develop new software. So the new SaaS is being built on the platform as a service. And then we're also looking at infrastructure as a service, which is more of kind of maybe the hardware side of all the storage and processing of that data that is powering the cloud as well. So we see that as the whole cloud ecosystem, with SaaS being probably the biggest part by weighting in our fund.
Okay, and then touching quickly on the performance of the ETF, I mean, you mentioned some companies that on the hardware side that have direct exposure to the trade war concerns, but software being a little bit shielded from that, but it's not immune to the broader, headwinds and downdraft that we're seeing. But looking long term, what is your anticipation for what we could see with the ETF, where it could be headed?
Yeah, we still feel very strongly about the positive outlook for this over the long term. And one of the reasons is so much of these SaaS companies are enterprise software providers. So if you look at businesses around the country, if we end up into a protracted trade war, if they're trying to figure out how to realign their business to make it more flexible or more contained with risk, I don't think that's actually a negative for these SaaS companies. I think it could actually be a positive where these companies are looking to kind of leverage software more effectively going forward, even in a kind of a pullback environment. So I think the positive outlook is strong regardless of what happens in the broader economy.
That's right. Well, it definitely seems like we could see a lot of growth in this space moving forward. So we'll definitely keep a very close eye on it. Jay, thank you so much today.
Thank you.
All right, everyone. Thanks for joining us this week for Investing Strategies. I'm Alissa Coram, and we'll see you next time.